Yeah. Yo, what's good? Alright, welcome back, welcome back, welcome back. Day 2 of the warehouse. Come on now, come on. One sec. Alright, let's get into it, bro. Yesterday we learned what is trading. Today we'll actually be getting into the charts and taking a look at what how to read charts and what candlesticks are, all that. Let's see. Let's get started. Okay. First of all, we got time frames, right? Time frames are the increments in which your candles move on the chart. So each candle can move from anywhere from 1 second all the way up to days, months, like years. It doesn't matter, right? Let's start with the example here, right? 1 minute. Let's see this candle. From the distance from the time this candle to this candle would be 1 minute. This candle to this candle would be 1 minute. This candle to this candle would be 1 minute, so on, so on. But on TradingView, you can change the timings, and I'll show you that once we get there. But on TradingView, you can change the time increments your chart moves in, and it would be let's say you're on the 5 minute time frame. It'd be this candle to this candle, that's 5 minutes. This candle to this candle is 5 minutes. This to this 5, and let's say you are on the 5 minute time frame. Let's say it's at 8 o'clock. Let's say 8:05. 8 o'clock to 8:05 has how many minutes total? 8, 8:01, 8:02, 8:03, 8:04. So 5 minutes total, right? 8:05, the new 5 minute candle would open. There's 5 1 minute candles in this single 5 minute candle. I know it's sometimes a little hard to just get through, but you're gonna have to kind of make it make sense. It's each 5 minute candle contains 5 1 minute candles. Each 1 hour candles contains 2 30-minute candles. 2 30-minute or 1 30-minute candle contains 2 15-minute candles, and then 1 15-minute candle contains 15 1-minute candles, or fucking 3 5-minute candles, so on, so on. 1 hour contains 60 1-minute candles. It contains, what's it, 60 divided by, I can't do math, my bad. 60 divided by 4 15-minute candles. It has 12 5-minute candles. So it's just so on, so on. They're all correlated, but you can change the increments in which your candles move. What do we use each time frame for, right? So as day traders, we use every time frame every day. Some people, like long-term investors, use mostly the daily time frame or the monthly, yearly, whatever it is, to see the average or the overall bigger move of the stock. If it comes down, they buy the dip. You probably heard the saying buy the dip. The dip usually happens on the higher time frames, or it's more visible on the higher time frames. There's still dips on lower time frames, but it's more visible long term on the higher time frames. So let's start off with the daily, right? I'm gonna go from largest to smallest time frame. Daily is the big picture. We use this on the daily basis to see which way the markets are, our bias on which way it's gonna move, where our draws on liquidity are, where we think the market's gonna move for that day. We use the 1 hour for intraday trend and structure, so we see whether the market's in an uptrend, downtrend, which way the market's playing out for that day. 5 minute the trade setups. This is the 5 minute, 5 to honestly, I'd say 15 even is where you really find your entries. This is where you start looking at fair value gaps. You start looking at all these confluences and ICT concepts to see if market's really giving you an opportunity to buy. Because what is day trading? Day trading is just the market moving, and it presents multiple opportunities throughout the day, and you have to be able to take advantage of opportunities. There's going to be opportunities every day, all day in the market. You just have to be there. You have to be on time. You have to be precise with your entries and just take advantage of the opportunities. If you don't, market's going to keep moving. Market's not going to stop for you. You have to move with the market. You have to adapt with the market. And the 1 minute, it moves really fast. It's 60 seconds per one, but there's also 1 second increments too. But on TradingView, you have to buy the special plan to get the 1 second. But honestly, no one really uses that. Maybe really rare occasions. 1 minute is where we really try to find the entry. That's what I like to usually enter off of. I'll stay on the 5 to 15 minute until I actually see this trade setup. And once I hop on the 1 minute, once I'm like, okay, I'm confirmed the trade's there, I want to enter. I go down to the 1 minute to see either a break of structure or some other confluence happening in the 1 minute that confirms my bias, and I enter off of that. 1 minute is just more precise to enter off of. That's why we use that for entries. Now, what is OHLC? OHLC stands for open, high, low, and close. This is the actual anatomy of the candle of a what are these called? Fibonacci candles, I think. Fibonacci candles. I think so. I don't know, something like that. Just candlestick, right? Just candlestick. The O of OHLC, O stands for open price. So let's say market opens at $5 right here. The high would the H would be the highest price. Let's say this is a 1 5 minute candle. Hold on, let me reset. Let's just say 1 5 minute candle. The time is 8 o'clock right here, right? And the candle just opened at 8 o'clock. The open price is at $5. At 8:01, let's say the price went up. Price went all the way. Or actually, let's go down. My bad. Price comes down. Price opens at 8 o'clock at $5. We come down to $3. That would be the lowest price that price went to in that minute, right? Let's say at 8:02, price comes back up to, let's say, $7. So price, what did price do so far? Opens at 8 o'clock. We open at $5. We come down to $3. We come back up all the way up to $7. And then let's say price pushes up at say like 8:03, price pushes all the way up to $10. And then at 8:04 we come down when the candle closes. We close back at $7. So in that 5 minutes, there was so much information that the market gave us, or this one single candle gave us, and within 5 minutes, that we need to be able to read. And why don't we be able to read that? We need to be able to read that to see where market wants to go, where market wants to trend. And there's different types of candles that the market gives us. And that's going to be the next couple of slides. But let's start off with the actual anatomy of candles, right? Like how to read the actual candle. There's an open price, and this is an up candle. Green up candle, red down candle. Price opens at $5, pushes low to 3, goes back up to 7, pushes higher to 10, and comes down and closes at the end of the candle at $7. So within that 5 minutes, price moved 1, 2, 3, 4 times. Price moves 4 times within those 5 minutes. And the high would be the highest price went to within those 5 minutes. The low would be the lowest price went to within those 5 minutes. The open would be where the price opened at the start of the 5 minute. The close would be where the price closed at the end of the 5 minute. Pretty simple. Candle color shows where price finished. So these are just basic candle colors. I use these because this is, I'm sure, if you think back as a kid, ever since you've been growing up, green's always meant like go, traffic lights go, fucking green just means go. Red means stop sign, stop, red light at the traffic sign, stop, right? Red always means just like bad, green always means good. But in trading, you have to kind of like get absolutely just erase that shit from your mind. I'm not saying don't like be running stop signs and shit, but like just don't like just completely forget about that concept that red's bad, green's good, whatever. That's why I love to change my chart colors. I'll show you guys my chart at the end of this video. But green, bullish. Bullish means up, bearish means down. Those are just some basic trading vocabulary, right? So on a bullish candle, we open and we open at one price, and we always close higher than that price. If we're in a red down or red / down / bearish candle, all mean the same thing. We open at a price and we can close lower than that price, right? So what we just learned on this slide right here is just absolutely flip everything for close except the high and the low. You keep those, just flip the open and close. That's all. Right, so let's say this was a red candle, right? We have a red candle right here. The open price opens at $5, comes down. Let's say price closes at, or let's say price opens at $5, comes up to $7, comes all the way down to $1 and closes at $2, right? So that was within 5 minutes. Price came down. It was a bearish candle. The 5 minute was a bearish candle. Whereas we learned on this last slide, on a bullish or up candle, price opens, we come down at $2, we come all the way up to like $10, and we close at $7, right? the close would have to be higher than the open, and for a bearish candle, the close would have to be lower than the open, right? But it's just basic candle anatomy. If you have any questions, like let me know, right? But that's what I got for now. Let's see. Okay, different types of candles and what candles can tell us about the movement that's gonna happen in the market, right? Body is the distance from open to close. We call it the middle part of this candle, the big part. This is what we call the body. It's called a wick. It's called lower wick, upper wick, lower wick. A large let's say we have a big candle, right? Let's say we have a big candle pushing to the upside or pushing to the downside. That's showing us that market is let's say like it closes in this is a green, right? Let's just take this for example. Say we have a big green candle at market open. It's going to show us that buyers are overtaking the market and there's more bullish order flow than there is bearish. So the bullish orders are taken and they're completely just wiping out the bearish orders, right? So we have a long upper wick, right? This is what we call oh, I lost all of them. Wait, where'd I go? Oh, there it is. A hammer candle. This I just call this like a reverse hammer candle almost. A long upper wick just means price from the highs was rejected, so we're going down, right? Or it's the same thing for the other way. Long lower wick, or a hammer candle, right? Price from the lower orders was rejected, so we're going up. It's just we also call it just a rejection wick. Honestly, I just put this just to put like vocabulary, but it's called a rejection candle or rejection wick. Read movement as a sweep is not one candle. So basic bullish and bearish movement, right? Bullish movement would be we keep making new higher highs, higher lows, higher highs, higher lows. My bad. I was saying bullish movement is making higher highs, higher lows. Bearish movement is making lower lows, lower highs. But I'll show you everything like what those look like on a line graph. I'm sure you've seen it on a line graph. I'll show you examples once I get to the charts. I'm just trying to run through this pretty quick so I can actually hop on the charts to show you guys. 3 candle pattern beginners should recognize. Okay, so these 3 are pretty important. I'd say a doji candle. Doji candle basically means there was buyers and sellers were both equaled out, and price was basically just indecisive. It just couldn't decide which way it wants to go right now, right? If that ever happens, we never take a trade off of that. We always wait for the next candle or the couple candles after that, right? To actually like look for which way market's gonna go. A hammer candle is a long lower wick rejection of lower prices. As I explained, it's just price coming and rejecting sell orders, and we keep going up. Or the buy orders basically, or the buyers outbuy the sell orders, so there's more buyers, more bullish movement. Engulfing, second body covers first momentum maybe shifting. It's basically just a shift in order flow, I would say. Let's say we have a red candle, like a small red candle. And then this is a perfect example, small red candle, and then the next candle is green, and we completely close above it, right? This is basically it's genuinely engulfing the whole candle, right? It's way larger than the other candle. This is what we consider, or it could be the start of a shift in order flow. So we have to always pay attention to these type of things because you don't ever know when market could shift up, market shift down. It could change order, it can consolidate. So you just have to always be able to read candles. Every candle means something different. So I'm my bad. Where was I? Right here. Okay. Candle shape reveals buyer and seller pressure. So if we have a large green candle and the close is near the high of the candle, the highest point the candle reached, that would mean there's a lot of buy pressure in the market. Buyers are taking the market over. Same thing for sellers, which is the opposite. So if there's a large red candle or a large down candle, and the close is near the high, not pushing the high, but it's near the high, there's a lot of sell orders coming in the market, a lot of sellers or a lot of bears coming in the market. Buying rejection, longer lower wick, buyers push back. Here we are. So this is what we call a rejection wick, hammer candle, or whatever you want to call it, right? This is small body, longer lower wick, shorter top wick, right? This means price came down. Price opened. Price opens right here. Price came down, pushed all the way down here. It probably swept something. Some type of liquidity was swept or something was swept. We pushed back up because so we had a lot of sellers starting off. Buyers come back. They keep buying orders, and we close bullish. So we leave a long wick down here that sellers got rejected off of. That's what a buying rejection is. Selling rejection, same thing, but the opposite. So Longer upper wick, small body, short lower wick. We candle opens right here. Buyers come in, they try to buy it out. Sellers say nope, we're not letting that shit happen. They come, they sell, they close near the low, and that's pretty much what it is. It just rejects buy orders, more bears on the selling rejection, more buy orders on the buying rejection. Read the same chart on multiple different times. Okay, now let's get into the fucking chart. Come on, bro. Finally, let's get into this shit. Randy, bro. Okay, yeah. Okay. Let's see. Okay, finally. So trading view. It's been 2 days. Finally, we can like hop back on here. Let me show you guys what we need to show you guys, bro. Let's finish. Let's do. Read the same chart on multiple time frames. Okay, so let's see. This chart, Nasdaq. What would you say we are currently in? Right now, right? Right now, we would say we're in an uptrend, right? We're trending up, and price keep trending up. We haven't broken to the downside. Let's say we go to 15 and 30. What would you say now? Like this area right here. Let's see, just this area. It would be uptrend. We're pushing up. Price pushing up. Even this area here. There you are. Price is pushing up. 1 hour. Price is pushing up. 4 hour. Price is pushing up. And let me give you an example of what I meant. Let me show you the time frame I was talking about. Time frames basically. If you can see, you'll see the time on the bottom of my screen right here, right? Once I hover over it. 8:50, 8:55, 9 o'clock, 9:05, 9:10, 9:15, 20, 25, 30, 45, whatever, right? Keeps going on and on and on and on and on. We go over 15, it's going to be every 15 minutes. 9 o'clock, 9:15, 9:30, 9:45, 10. So on and on and on. 1 minute, same thing. You can scale down, up, 9, 10, 11, 12, 30, 40, 50. So on and on and on and on, right? But as you can see, there's more candles in the 1 minute compared to, let's say, the 30. Let's highlight something. Let's highlight this area right here. Right? This is all 30-minute candles. If we drop it on 1 minute, we see that it's a lot more candles in the 1 minute. Right? This is the total. This is all 1 minute candles within this 30-minute range. Right? So yeah, that's just pretty much how time frames work. And then I was gonna show you guys. Oh, the open, close, all that stuff. Cool. That's pretty easy. Say this 5-minute candle right on the 30. Where do we open? My bad. We open right here. Price comes all the way down here, all the way down here. Sellers come, they sweep these lows right here. We swept. Buyers come in, buy the market back up. We push all the way up here, and then we close. We end up closing right here, right? Close. High. Open. Low, right? Oh, damn. That's lucky chop. Fuck. But it's cool. Like, you get the point, right? High, close, opens, low. It's pretty much the anatomy of a candle. Nothing else more to it. It's pretty simple. Let's see. Let me get you a bearish example, like a down candle example. Down candle right here. Perfect. The most recent one. Where's price open? Right here. The highest price push to? Right here. The lowest price push to? Right here. And where does price close eventually? Right there. Nothing else to it, honestly. That's genuinely it. Pressure, body size, which rejection, close. Okay, there we go. Here, we have a perfect rejection wick right here. Or, I don't like that rejection wick. Oh, this is a rejection wick already. Hold on, let me lock you in. Rejection wick, I would say, would be right here. The example. Right here would be a good rejection / doji candle too, both of them. Rejection would be, we swept all the highs, buyers came, rejected all that price down here. Why is my thing tweaking? There we are. This was the highest price push to, buyers came, or buyers tried to buy the price up. Sellers said nope, there was too much sell pressure up here. We come down, we close, see small body, and then we close. After that, what happens? This would be a sweep, where we respect this gap to this imbalance. Boom, price comes all the way down. that's just how it is. You know, it's you guys start identifying stuff like this. Let's see. This would be a doji candle. Let's see. This would be a rejection candle right here. Doji candle usually is the start of a shift in movement, so just keep that in mind. This would be rejection. Sellers come in, too much buy pressure already, so we just close above and we'll keep pushing up. Let's see what else. What other candle? Let's just do a basic down candle, right? Basic down candle. Oh, there we are. Let's do this one, right? This one you'd be like, oh, but there's no wick. There is. Trust me, there is. It's just really tiny. There it is. See that? Really tiny wick. It almost looks like there's no wick, huh? Yeah, I thought I was tripping for a second too, but we good. Yeah. So price opens. Price opened right here. Sellers, I'm guessing, probably came down first. Sellers came down, pushed down a little bit. Oh, I'm lying. This is a down candle. Wow, I'm retarded. Sorry about that. Boom. Price opens right here. Buyers probably came in and said, oh, like, let's buy this candle up. Too much sell pressure already. We come, boom, sell all the way down. What the fuck is happening? Sell all the way down. And then we push low, low. And then at the end of it, I'm guessing there was probably a little bit of buy pressure. That's why it closed low above the actual wick. But that's candle or not anatomy, honestly. It's nothing more to it. Let's see what else is there. Compare 1 minute notice, added noise, faster. Yeah, I showed you that. There's more candles in 1 minute than there's compared to like 30, right? That's gonna be the end of day 2. It's pretty simple, pretty quick video, you know. We're gonna be getting more to tomorrow, all that. Let's see. Tomorrow we have any questions, by the way, let me know. The Discord, join the Discord. I have a whole questions page in there, so you guys let me know. Tomorrow is going to be trend line. So tomorrow's going to be all chart, no more slideshows. We're done with the slideshows. I know they were annoying, but I'd say take notes, as many as you can, you know, get it done. But now after that, we're on the charts completely. No more slideshows for this. Cool. Tomorrow's going to be trend lines. And for the takeaway today, if you can answer these, you can read a candle. What time frame am I viewing? Where are the open, high, low, and close? This is your homework tonight. You have to mark out open, high, low, and close of 30 different candles. There we go. Is a candle bearish or bullish, or is it up candle or down candle? What type of candle is it? What do the body and the wicks of candles reveal? Do same 30 candles you mark the things on. See what type of candle it is. Do you think it's a doji candle? You think it's a hammer candle, rejection candle? What type of candle it is? And are buyers or sellers showing more pressure? So what is there more buy pressure in the candle? Is there more sell pressure in the candle? Check 30-minute candles. Check 5-minute candles. 15, 1, all of them. And yeah, that's pretty much it for today, guys. Tomorrow we'll be doing trend lines all in the charts. So tomorrow's gonna be the real stuff. But review, take notes. You know, do what you gotta do. But see you guys tomorrow. Peace out.